business received cash and issued common stock. Right? So when business issue common stock, when business receive cash, cash is plus. So cash is which account? Asset account. So we make a T account for cash. This is credit side, this is debit side, and this is common stock. Credit side, debit side. When business receive cash, so we write it down because this is plus. Plus means debit. Because asset increase, debit. Cash will be written here as 50,000. Since debit means plus, we do not have to write this plus because debit already means increase. Understand? Company issued common stock. What are the common stock? Insider claim. Insider claim increases. So common stock belongs to owner's equity. Owner equity increases. We record it on credit side. Here we go. We record it on credit side. 50,000. Right? Why I didn't sign? Why didn't I write the plus sign here? Because this is owner's equity account and credit already means positive or increase. Understand? So let's see here. Cash, debit for increase 50,000, common stock, credit for increase. So in that case, accounting equation is balance. Guys, understand? Oliver, Venetia?
Yes.
Momo, good. Tara, Priscillo, David, Faik, Marco,
Yes.
Sufyan,
Yes.
Subhan,
Yes.
Judy, 10, Nana.
Yes, sir.
Good. Now, second transaction. So we already have, because we already open an account, we already have a register here. So every time we don't have to make a new for cash. No, cash is already open. It's already open. So we carry on the previous register here. Okay. So Friday second transaction is a 40,000 cash purchase of the land, which is the effect. What is the effect on the accounts when you purchase land for cash? Do we have a land account here? Do we have a land register here? No. So we have to make a land T account here. Land. So where this 50,000 is coming from? From previous transaction. Now this transaction, cash increase or decrease? When you pay cash to acquire land, cash is decrease and land increase. So these two accounts are going to affect. So this is double entry system. So when cash is decreased, where we should write it down? Cash in asset account, asset decrease, we write it down on credit side. So here we didn't write credit and debit. Why? Because we already know that the right hand side is credit side, left hand side is debit side. Your left hand side, right? I know you're watching through videos, so you would be very confused. Your left hand side is debit, your right hand side is credit. So cash decrease, cash is an asset account, asset decrease, we write it down on a right hand side, 40,000. Did you notice I didn't write negative here? Why? Because credit side already means that these is decrease in accounts. So I don't write anything here. And land increase, land is an asset account. Land increase, we write it down on the debit side. So even if I don't write debit here, automatically assume that left hand side is debit side and 40,000 is here. Equation is balanced. Why? Because there is increase in asset and there is decrease in asset and there is increase in asset here. Equation is balanced. Everybody understand, or should I need to repeat one more time?
All clear.
Well done.
It's clicking.
Good. So what are the balance now? So did you notice something? Balance is written down here, not here. Because how much balance, how we write down the balance, which side is greater than the, for example, here the debit side is greater than the credit side, which, how much? 10,000. Which side is greater? You write down the balance over there. Simple. So we call this carry forward balance, right? Or just balance. So we have a debit balance here. So debit side is 10,000 greater than the credit side. So we don't write 10,000 here to make it balance like 50,000, 50,000 here and add 10,000 here as a balance. No, no. We write it down in accounting double entry system. We write it down balance as which side is greater. So you see debit side is greater than credit side. How much? 10,000. So we write down 10,000 on the debit side. Right, guys? So you see on accounting equation, it is balanced. If you see the graphical, asset is equal to liabilities plus owner's equity. We don't have liability yet. We have only 50,000 common stock, 10,000 balance of cash, and 40,000 balance of land. So if you add all the assets is equal to common stock. 50,000 is equal to 50,000. The equation is balance. So not only double entry system also follows the accounting equation, but it is more meaningful because it tells you each and every detail that which account is hit by which side. So it is more detailed system, right? At the end, you can easily know that, okay, against which transaction you have paid the cash, so that fraud gonna be minimized. We talk about the fraud session in our, I think, coming lecture. We talk about cash embezzlement, fraud, and all fraud triangle, this kind of stuff. Now, so all the accounts that belongs to assets, liabilities, and owner's equity, these are called balance sheet accounts. What are the accounts here? Cash, inventory, account receivable, all the long-term assets like AC, furniture, computers, equipment, right? Equipment, land, building, plant. What are the liabilities? Long-term liabilities and short-term liabilities. Accounts payable, here, long-term debt, owner's equity, common stock, and retained earnings. So in double entry system, all the asset, liabilities, and owner's equity accounts, we call these balance sheet accounts. Balance sheet accounts. Account, you can denote it with this account. Okay? If I write it down A by C, it means account. Okay? So, but here, revenues and expense belongs to income statement. So, revenue accounts and expense accounts are called income statement accounts because their balances directly goes to income statement. Right? Cash balance goes to balance sheet under asset. Accounts payable balance goes to accounts payable under liabilities, current liabilities. Common stock or retained earning balance will go to balance sheet. So that's why we call those balance sheet accounts. Here, the revenue balance will go to revenue account, and this account balance will go to make, income statement. So we call this income statement accounts, right? So revenue accounts are no doubt the basic philosophy, the logic is the same. If revenue increases, it increases shareholder equity, right? So remember, revenue definition is from delivering goods and services to the customer. For example, if you are a banking, you are providing banking services and you sold the office chairs. So office chairs is not your normal business. You are delivering services of banking services, not selling the furniture. So that is not your revenue. Revenue is always selling your goods or services, which is your primary business. Expenses, they decreases the stockholder equity. If expense increase, stockholder equity decreases. So remember, the same logic, credit side is called right side, debit side is called left side. Revenue account, if revenue increases, we write it down here. If revenue decreases, we write it down here because revenue belongs to stockholder equity. And in accounting equation, increase mean credit. If owner's equity increase, credit. If owner's equity decreases, debit. So that's why the same logic apply here. So we already know that stockholder equity consists of stockholder, retained earning, and retained earning formula is net income minus dividend. So net income gonna be calculated from revenue minus expenses, and retained earning formula is minus dividend. We call this ending retained earning balance. So revenue and expense belongs to retained earning, and retained earning belongs to stockholder equity. Sorry, belongs to stockholder equity. So did you notice something that all are positive here? Expense and dividend, they are negative. It has the opposite effect on stockholder equity. So common stock increases will be recorded on credit side. Retained earning increases will be recorded on credit side. Revenue increases will be recorded on credit sides. What if the dividend increases? Increase in dividend means decrease in stockholder equity. Guys, are you with me? David, Faik, Subhan, TD, John Paulo, 10, Priscillo, Miriam, Noon, Mirko.
Yes, sir.
Yes, sir.
Yeah. Yes, sir.
I'm talking about very important stuff here. So you notice something? Common stock increases mean it increases the stockholder equity. Stockholder equity increases, we record it on credit side. So we record it on credit side. Retained earning increases because it increases credit side. Revenue increases, it increases the stockholder equity, we record it on credit side. But dividend increase mean decrease in stockholder equity or owner equity. So which decreases the, when stockholder equity decreases, we write it down on the left hand side or debit side. So if dividend increases, it is written on debit side. So many students confused, sir, this dividend and expense, it belongs to stockholder equity. So if there is increase, we should write it down on credit side. No, because the logic is if expense increases or dividend increases, both decreases the stockholder equity. So that's why increase